Hello and welcome to the BizNews Breakfast Briefing. I'm Lucy Ferreira for biznews.com. In today's show, Sean Pech of Ranmore Fund takes us through the commodity sector and what is happening with resource prices both locally and internationally, as well as noteworthy developments in the Chinese property market. Sean also provides us with a particular focus on oil, specifically looking at Total's share price in light of its Southern African and global activities. We then hear from Chris Pappas, Executive Mayor of uMngeni, the only DA-run municipality in KwaZulu-Natal. In this extract, we hear about the young mayor's 8 months in office, ranging from the challenges of politically instigated violence to the threat of potential bankruptcy, as well as the complex dynamics playing out between the major political parties in the province. We then end off the show with the daily news update from the FT in London. First off, though, as usual, we have Alec Hogg with his expert analysis on the overnight market movers.
Thanks, Lucy. Good morning. It's Tuesday, the 19th of July. It wasn't always a down day. In fact, most of the session, the US markets were higher last night. The Dow Jones Industrial Average, for instance, started off 300 points better in the morning. It closed 216 points down in the evening. Reason? Confidence, consumer confidence starting to tail off a little bit. There was some more information that came from Home Builders Association in the United States, which shows that their confidence on building new homes for consumers has dropped to 55. That's down by 12 points. Percentage-wise, that's down by about a quarter. So it shows that there is a tailing off in the exuberance that one saw in the United States a little while ago. There's a big swing last night in those share prices. We saw, for instance, Apple also falling by 2%. This after news came through from Bloomberg that it plans to slow its hiring next year. Now, this is obvious if you think about it, because the US is slowing down, the economy is slowing down, perhaps going into a recession, which is what is worrying a lot of investors. But the mere fact that Apple announced it and that the share price reacted negatively shows you that we're in a very much a bear market at the moment. Two big companies releasing results last night, this during the US quarterly season. Goldman Sachs, it came out with a 47% decline in its net revenue. That meant in numbers from $5.5 billion in net revenue in the previous quarter to $2.9 billion. The market, however, had expected only $2.6 billion. So the result, although Goldman's profits were down sharply, the share price was up by 2.5%. They have, however, anticipated even worse profits in the quarter to come. That doesn't seem to have registered just yet with investors. IBM, on the other hand, came out with sales up by 9% to $15.5 billion. These are really big numbers, aren't they? They have exited Russia. They also complained about the strong dollar around the world impacting their financials. And this is something that the market is now taking note of. IBM's share price was down 1.25% ahead of the results and 4% in after-hour trading. Overall, the S&P 500 index down 0.8% last night. The Nasdaq by a similar amount, 0.8%. The South African rand also came under some pressure at 17 rand 13 this morning. It's 8 cents weaker against the US dollar. 23 cents weaker against the pound at 20.46, and 14 cents weaker against the euro at 17 rands and 35 cents. Bitcoin, however, has been picking its head up, got to nearly $23,000 last night, settling at the moment at about 4.5% higher than it was on Monday. That's at 22,178. Brent crude also jumped yesterday. That was up by $4 to $106 a barrel right now. Here in South Africa, a very strong day, led higher by resources. The JSE All Share Index was up 3% yesterday. ArcelorMittal is leading the pack. That was up by 9%. Exxaro 7%. Sibanye 6.5%. And Kumba, Anglo American, BHP, all 5% stronger. They are finally starting to react to the weaker rand. And that, of course, means that the money that is made by these South African listed companies in the global markets is higher in rands, and so the share prices should adjust, and they duly have. Telkom came back 4% yesterday after the news on Friday that MTN is to make a bid, maybe. That, of course, pushed up Telkom's share price from 34 Rand to 44 Rand, but it's now back to 40 Rand a share. Looking ahead to today, I've got two fascinating interviews that you should check up on BizNews and pick up on them a little later. Piet Viljoen will be telling me his views on what's going on with the resources stocks. Remember, they have fallen sharply since March, but as you heard a little earlier, seem to be picking up their heads, or at least last night. And then Koki Koiman will be running the line through the big banking shares that have reported in the US. Last week we had a bunch of them, and again yesterday Bank of America and Goldman Sachs. Koki, I must warn you, is extremely bullish, but both of those interviews will be up on BizNews later today. Coming up now, though, are two other fascinating interviews, but I'll let Lucy tell you about those.
Next up, we have Sean Pech and Alec Hogg.
Sean Pech of Randmore Funds. Quite a few value investors have been enjoying a great run with resources shares here in South Africa, but that's reversed. Now, last month when you and I were having a chat, you warned that metals prices had gone into a bear market. But my goodness, after having a look at the share prices of Anglo American, Sibanye, Stillwater, some of the other BHP Billiton, some of those international metals companies that are listed on the JSE, a lot of them have halved since March. Are they now getting to value area, or are you a bit spooked by this too?
Different commodities are driven by different things. So, for example, the coal price hasn't halved. Copper's down 30% from its highs. I think nickel's down about nearly 70% from its highs, although those highs were somewhat artificial because of the short squeeze that we had in nickel earlier this year. Platinum and palladium, well, that's driven by auto sales. And auto sales are going to be soft, and there's some concerns that the EV market is ramping faster. And so maybe gasoline and diesel sales are going to be slower. So that's probably weighing on platinum and palladium. Obviously, the Rand is giving those companies some sort of respite. But what's interesting is that some of the data I've seen is that you get commercial traders. So that would be companies, car companies looking to buy platinum and palladium, and you get non-commercial, which are the speculators, the hedge funds, the CTAs. And there's some data to suggest that some of those commodities have been aggressively sold by the non-commercials. And so that's the traders getting out. I think one of the worries at the moment is this Chinese property market. There's a bit of a wobble going on there. We've seen Evergrande, and I see today that China's trying to stabilize the property market by stalling repayments and mortgages. Lots of Chinese people have bought properties and then found that the prices are now substantially lower. And so what happens in the Chinese property market could be quite meaningful for the commodities. But every time there's a cycle, it's always slightly different. This time with the metals, compared to last time, we've got ESG and we've got wind farms and solar and all those sorts of things. We've got battery powered cars. Those things use nickel and cobalt and copper. And so we didn't have that last time in the cycle. So, you've got to look at it. Different companies have different dynamics. Some are more exposed to iron ore. Well, that's going to be a different one to. So that's where the active management makes sense, Alec, because each company has its own dynamics and one needs to look into those. So, we don't have Glencore. We took profits at Glencore quite well. We are overweight oil companies. And so something like Total has pulled back quite meaningfully. That's one of our largest holdings in the fund, and is now at the same price as I think it was in September 21. But September 21 in dollar terms. But in September 21, the oil price was 80. It's 100 today, and refining margins are nowhere near what they are today. And so that company looks to me to be on like 4 times earnings. And so there's always a case of when you get these innocent bystanders. That's what I like to think about them. Okay. And go in a market route, go find the innocent bystanders, the ones who are just thrown out with the others. There are some companies that deserve to be down, but the innocent bystanders, those are the ones you want to look for.
Total's an interesting one just to close off with from a Southern African perspective, because I believe that the Mozambican investment, the the biggest investment ever in Mozambique, the Total LNG operation in the far north that was suspended because of the military activity that went on there. That they're coming back in again, and it's starting the early stages of startup once more. So that's good news. And there's other parts of the world where Total is also going into natural gas in a big way. So is that the reason why the shares are under pressure, that it's investing heavily into the future right now and maybe not generating as much profit as shareholders might want today?
Oh no, I think it's just caught up in the oil prices down, sell all oil companies, and I think that's particularly good news that the Mozambique is hopefully it's not all dead and buried there. Total are a major player in LNG worldwide, and as we know from what's going on in Russia and Europe trying to wean itself off Russian gas. LNG is a big market, and everybody always thinks of Shell and Qatar and all the rest. Well, Total's also a meaningful company, but people don't really want to own oil companies, and so we always like to ask ourselves, why is a stock mispriced? Well, it's mispriced, we think, because people don't want to own oil companies. They prefer to own the tech companies that they believe are greener, even though the likes of Amazon generate 60 million tons of CO2 a year. But that's the perception. But Total is one of the few companies, or a few oil companies, that didn't cut its dividend. So I think that's good news. And they're also a large company in renewables. I mean, they bought 50% of SunPower, the large solar power company, years ago. In fact, we owned SunPower at the time. And so they were an early mover in this whole renewable space. LNG and renewables and oil and refining are a big, they're each important parts of their business. It's not just oil.
So if we were to add a wild card into our portfolio, we could do worse than Total.
I would think so, Alec.
Sean Pech from Randmore Funds. We'll be following that one closely.
And now for the mayor of uMngeni.
Chris Pappas, the executive mayor of uMngeni. In Cape Town, it started off with a coalition led by the DA. Today, the DA is very strongly running the Cape Town City Council, and indeed it's like that throughout the Western Cape. The fact that you are running the only DA municipality in KwaZulu-Natal, some people might suggest that this is a potential for a repeat of what happened in Cape Town. Is that your agenda?
Certainly. I mean, you don't go into politics to be second all the time, and you don't go into politics not to grow and to win. I don't think the DA in KZN is ever going to be a 50% party. That would be naive of us to think. But we are growing. We have grown in every election. And what that means is that the DA becomes the kingmaker in KwaZulu-Natal. So the stronger that us as a kingmaker are, the more power and influence we have over the coalitions that will emerge in 2024 in this province. The ANC is already below 50% if you look at the local election results. And there's a two-seat difference between the opposition and the ANC in the legislature. So I think this could be a catalyst, particularly at a local government level. But obviously, they say all politics is local. So if we can do things right here, if we can manage the confrontation that we have, if we can overcome any mistakes, because we will make mistakes, and if we can genuinely show progress that improves people's lives, I think it gives the people of KZN an option that they've never had before, and that's IFP or IFP or ANC. So we're here to say, well, KZN hasn't moved forward very much. You have a third option. Why don't you try then?
It also brings a lot at stake for the other parties, for ANC in particular. Is that why you saw the developments of this week? In other words, really dirty tricks being employed against you?
Yes and no. I just think the ANC is generally a dirty organization. It's a I don't know. It's a bunch of gangsters and thugs that have what's become that over time. Let me not disrespect people who fought for democracy, but their legacy is no longer what the ANC is anymore. So yes, on the one side, I think they They don't know how to be an opposition, and they're desperate for power. When you lose power, and I've noticed that in the position that I'm in, is that there's incredible power in being in government, whether it's access to information, the control of where budgets go, what the priorities are, the people who make up different committees that make a decision. So there's incredible power in being in majority or in government. That as soon as you lose all access to that. You lose access to the funds, the contractors, the work, the whatever it might be. And when that's what you've been surviving on, that is your existence. Your existence is not good governance. It is abuse of power to stay in power. Then I think they're wondering a little bit at the moment. But like I said before, you also have an organization that is built over the last 10, 15 years out of abuse of power, cadre deployment, and it's evident in the decline of services throughout the country. So it's not as if I'm trying to be unfair to them. I mean, if we're in the state that we're in because of the organization who's been a majority for a long time, poor decision making, lack of prioritizing. So yeah, I don't know if that answers your question correctly, but I think it's a bit of a two-part answer.
What about at that local level? How are the finances of your municipality looking today as against a year ago?
So much better. Our cash flow is we haven't got a problem with cash flow. We have challenges with access to capital. I think that's a challenge for all small municipalities that are not entirely rates dependent, but are grant dependent. But we're working on accessing capital for quicker interventions, and there's a number of things we've put in place. But we have managed to pay off 2 out of 4 loans. We have managed to increase or collect just over 21 million rands with outstanding debts to us. We are up to date with our Eskom account. We've got cash on hand. Incredibly, usually municipalities our size, when it comes to the 1st of July and you get your first tranche of equitable share, most municipalities our size, that just disappears. It goes to pay creditors, it goes to pay Eskom, and it goes very quickly. So we got an allocation of 34 million rand a week ago, and there's just over 29 million rand in the bank making babies. So we are in a good financial situation at the moment. We have just completed our general valuation, which was 2 years out of date, which we did in record time. We kind of impressed the provincial government here. And that will also give us about an 8 to 12 million rand increase in revenue that will then be able to go towards maintenance. So we're looking okay. We're busy working on a plan. Councillor Passman was doing it to repay our last loan that we have that was taken to pay salaries a few years ago. And once that's done, we get an extra 5 million rand back in securities. So again, it's slow, but it's work in progress, and you can see a difference in what we're able to do.
And here's the FT.
Good morning from the Financial Times. Today is Tuesday, July 19th, and this is your FT News Briefing. Trouble in Westminster is jeopardizing plans for a big tech listing in London, and whoever replaces UK Prime Minister Boris Johnson has a heavy economic lift. Our chief economics commentator Martin Wolf joins us today to talk about the challenges. Plus, a high-cost, high-stakes, and high-heeled legal battle has ended. We'll tell you who won. I'm Mark Filipino, and here's the news you need to start your day. Japanese tech investor SoftBank has paused its plan to list its British chip design firm ARM on the London Stock Exchange. British officials, including Prime Minister Boris Johnson, had lobbied for the listing, but the current turmoil in British politics has put a damper on things. Here's the FT's Anna Gross.
For a while there, it was looking like Masayoshi Son, who's SoftBank's chairman and CEO, was looking more favorably at a dual listing for the company, so in New York and London. But now, as you know, the UK government is in chaos. Johnson has said he will resign. And 2 of the key officials that have been really instrumental in talks with SoftBank have also resigned their posts. And so people who are close to ARM and SoftBank are saying that they're pausing discussions while they wait for a new government to come in and they wait for the dust to settle to pick up those negotiations again.
Now, how big a deal would this listing be for the UK? And how big of a deal would it be if SoftBank decides not to list ARM on the London Stock Exchange?
Well, I don't want to overplay how big a deal it would be. I mean, a lot of bankers that I speak to are like, ARM was never going to list in London. It was always going to list in New York, where it gets better, tech stocks tend to get better valuations and there's more liquidity. Ultimately, it will just be a real hit to the reputation of the UK and to the London Stock Exchange, because it will send this signal that it's not a particularly good home for big and really successful tech companies.
Anna Gross is the FT's telecoms, media, and technology correspondent. Thanks, Anna.
Thanks, Mark.
Speaking of political turmoil in the UK, Conservative lawmakers are narrowing down the field of candidates to replace Prime Minister Boris Johnson. Here are two of them at a recent TV debate: Foreign Secretary Liz Truss and former Chancellor Rishi Sunak.
In 70 years. That is not going to drive economic growth.
I'd love to stand here. I'd love to stand here and say, look, I'll cut this tax, that tax, and another tax.
Now, whoever takes over as prime minister will have to manage an economy gripped by inflation and stagnating growth. To talk more about these challenges, I'm joined by the FT's chief economics commentator, Martin Wolf. Thanks for joining us, Martin.
It's a pleasure.
So, Martin, the UK economy, not in great shape, hasn't grown much in the past 15 years. It's got the second lowest productivity among G7 nations. And Boris Johnson, a lot of people would argue, has added to the problems we're talking about.
Boris Johnson, in a way, exploited it because he saw the opportunity opened up by the Brexit referendum, and the opportunity was created by the dissatisfaction of so much of the public with the experiences they were having, which the conventional orthodox conservatives were unable to do anything about. And so he came along and said, Brexit is the answer. And I think it's pretty unambiguous by now, 6 years after the referendum, that this has made things worse because we've added some very deep, long-term structural problems. We've added to those the immense shock of Brexit.
So policy-wise, what's the biggest challenge for the next prime minister? What could they do first and foremost?
The immediate problems are they've got to resolve Brexit at last. They got elected to get Brexit done, and we're just about to start another trade war, in all probability, after repudiating the agreement that Boris solved Brexit over, namely the Northern Ireland Agreement. Then they've got this giant cost of living crisis, for most of which they aren't sort of responsible. They aren't responsible for Bank of England mistakes, but above all, they're not responsible for the vast rise in global prices, particularly of energy. But it's going to cost a lot of money to do that, and that's important. They're going to have to back the Bank of England on controlling inflation, even though that will be terribly unpopular and could lose them the election because it's likely to be a big slowdown. And then in the long term, they're going to have serious policies to restore growth to our economy.
Are any of the candidates advocating for the kind of policy that you think would benefit the country?
No, I think basically they're ignoring all the real issues. They're engaged in fantasy economics. Tax cuts will solve everything, which is a misunderstanding at fourth hand of what Margaret Thatcher believed in the wrong context. I think this is ruinous for the country. It's started with Brexit and it's continuing now with this auction of tax cut promises. In this context, from my perspective, the least unsavory candidate by far is Sunak, because at least he recognizes that policy has to add up in a very simple way, even if he's not offering anything interesting or new or thoughtful. But at least he recognizes there has to be a certain sobriety in running a country like ours.
Can you give me an economics 101 about why cutting taxes in an environment like this would be harmful to the British economy?
I think we have to distinguish the short run from the long term. I think it's perfectly sensible to use fiscal policy to cushion the blow to spending, particularly on those whose real incomes are really dramatically reduced by these huge price increases of food and energy. That's why the focus should be on spending in this context, not on tax cuts. And the idea that they will pay for themselves is certainly wrong. And so my minimal suggestion is if you're going to propose long-term tax cuts now, we must assume revenue will fall. We can't afford larger, longer-term fiscal deficits, structural fiscal deficits than we already have. So they've got to say what spending are they going to cut and who it will hurt. And they're not being honest about this. So it's not a serious discussion.
Martin Wolf is the FT's chief economics commentator. Thank you as always, Martin.
Pleasure.
To stay up to date on the Prime Minister race, check out the FT's election tracker. We've put a link in the show notes. Even if you don't wear high-heeled shoes, you might know the name Manolo Blahnik.
Later that week, I had a religious experience at Manolo Blahnik.
That's Carrie Bradshaw, the main character in the TV series Sex in the City. She was obsessed with these famously high-heeled and famously expensive shoes. But behind the scenes, the British designer was fighting with a businessman in China for the rights to the Manolo Blahnik name. A costly legal battle went on for 22 years, and a Chinese court just handed down a ruling in favor of the company. So now Manolo Blahnik can strut its brand in the world's fastest growing luxury market.
The heels are almost high enough to put me face to face with Natasha if Natasha wears flats. But why would she wear flats?
And that's all from the briefing for today. If you enjoyed this episode, please follow BizNews Radio on your preferred podcast channel to make sure that you don't miss tomorrow's show.